To understand what a Bitcoin IRA is, we first need to understand what an IRA is. IRA stands for Individual Retirement Account. It's an investment concept that started in the 1970s to incentivize Americans to save more for retirement. In simple words, it's an investment portfolio with great benefits, but in order to get those benefits, you have to wait until you retire before you cash it out. What benefits? Significant tax benefits such as tax-free trading, tax-deferred gains, or tax-free gains. IRAs have been extremely successful with several enhancements over the years. Today, investors hold over $9 trillion worth of investments in IRAs. There are two different types of IRAs. First, you have a traditional IRA. Traditional IRAs were introduced with the Employee Retirement Income Security Act of 1974, or ERISA, and made popular with the Economic Recovery Tax Act of 1981. The traditional IRA gives you a tax write-off each time you invest money in it, commonly known as making an IRA contribution. Additionally, you can make an unlimited amount of trades in this account without them being considered taxable events by the IRS. With traditional IRAs, the income you deposit is not subject to income tax. Well, not yet. Instead, you pay taxes only on the amounts you withdraw after you've retired. However, if you decide to cash out your money from a traditional IRA before your specific retirement age, usually 59 and a half, you'll get penalized by paying all of the income taxes you deferred on the deposits and on any gains realized, as well as an early withdrawal penalty. The other type of IRA is the Roth IRA, which was introduced as part of the Taxpayer Relief Act of 1997 by Delaware Senator William Roth. The Roth IRA requires IRA contributions to be made only from earned income which has already been taxed. Like a traditional IRA, you can make unlimited trades in the account without any tax implications. With a Roth IRA, all the gains and withdrawals you make during your retirement are tax-free since you already paid taxes on your deposit. Roth IRAs are one of the most powerful investment vehicles in the world, but it's important to know that unlike a traditional IRA, not all investors can open one. Generally speaking, the Roth IRA is not available for people who make over a certain amount of income per year. For example, in 2020, you won't be able to contribute to a Roth IRA if you have an income greater than $139,000 for a single or $206,000 for married couples filing jointly. However, those limits don't apply to opening and contributing to a traditional IRA. To sum it up, the difference between a traditional IRA and a Roth IRA comes down to this. Do you want to pay taxes now or do you want to pay taxes later? This is something for you, your financial advisor, and/or your tax professional to decide. Until recently, IRAs were primarily used to trade and invest in stocks and bonds, but now investors are able to buy and sell cryptocurrencies in their IRAs as well. This has birthed an entirely new industry, which frequently falls under the category of Bitcoin IRAs, or more generally, Crypto IRAs. Crypto IRAs are companies that allow you to open an IRA and buy and sell cryptocurrencies on their platform without having to worry about paying taxes on each trade. For example, normally, if you buy Bitcoin at $5,000 and sell it at $10,000, you'd make $5,000 of capital gains, on which you would be required to pay taxes. In a crypto IRA, however, you wouldn't owe any money on taxes since tax-free trading is a unique benefit of individual retirement accounts. So if you are a believer in Bitcoin, Ethereum, and other crypto assets continuing to perform well as investments, it might be worth considering whether a crypto IRA is for you. While IRAs can provide huge benefits for investors, there are still a few things to consider. First, in order to build your IRA, you'll need to contribute money each year that will count as your IRA contribution. Since IRA contributions are capped at certain amounts per year, you can't just put all of your money into an IRA and receive the benefits. For example, in 2020, the IRA contribution cap is $6,000 or $7,000 if you're over the age of 50. This typically increases each year, so you'll want to do some research on how much you can contribute. Second, there are some limitations and conditions for withdrawing money from your IRA. With traditional IRAs, while investors have the ability to trade between various assets, they can only withdraw money out of their IRA and into their own personal bank by performing a process known as a distribution. Distributions are normally reserved for people who have reached their retirement age, which for most people is defined in these tax laws as 59 and a half. While there are some exceptions, including filing for early retirement, normally if one wants to take a distribution before retirement age, there will be an early distribution penalty. It's important to talk with your tax or financial advisor to learn more about how distributions work. For Roth IRAs, the principal can be withdrawn at any time with no penalties. This means that if you invested a total of $6,000 and it turns into $12,000, you can still withdraw up to the invested principal amount of $6,000 at any time. In addition to withdrawing the principal at any time, investors can withdraw some profits from their Roth IRA under certain qualifying circumstances. These include a first-time home purchase, medical expenses, higher education, and disability, among others. As I've mentioned before, it's important to talk with your tax or financial advisor to learn more about such qualifying circumstances. So now, after understanding the potential benefits and drawbacks, let's talk about how you can actually start your own cryptocurrency IRA. There are 3 ways to start a cryptocurrency IRA. First, you can start a crypto IRA from scratch. This means you'll open a new IRA account and start making contributions to it. Second, you can fund your crypto IRA with what's known as a 401k rollover. This is where an investor takes a 401k or other retirement account from an old employer and rolls it over into an IRA. This does not trigger a taxable event, but simply gives you more flexibility, as IRAs are more flexible than 401ks. Third, you can fund your crypto IRA with what's known as an IRA transfer. This is where an investor takes an existing IRA from another financial institution and transfers it to their new IRA that allows crypto investments. This transaction does not trigger a taxable event, but simply allows the investor to pair with a new financial institution, one that likely allows investments that the investor wishes to access, such as cryptocurrency. Cryptocurrency IRAs require several factors to come together. For example, you need a trustee to hold your funds and to allow you to deposit contributions. You'll need a trading platform to manage how you invest and trade. You'll also need a custodian for your cryptocurrencies and access to a cryptocurrency exchange for conducting trades. There are several companies out there that act as facilitators and merge all of the elements I just talked about together. It's important that you do your own research and find one that fits your investment goals. In the description below this video, we've linked to some good places to start. Here are a few important things to consider when choosing a company to manage your IRA. Initially, fees are one of the most important things to consider when choosing a cryptocurrency IRA provider. Be sure to investigate all of the fees and get them in writing. Here are the most common fees you'll find. Initial purchase fees are fees that may be charged upon your first purchase of crypto assets. Trading fees are fees that may be charged each time you perform a trade or transaction. Ongoing fees include account setup, storage, administration, platform fees, and much more. If you're looking into a Bitcoin IRA, you'll also want to research how the invested cryptocurrencies are stored and secured. Important questions to ask are, where are the coins held? What security measures are taken to keep them safe? And who is the custodian for the coins and what is their reputation? Custodians will usually have a white paper to help potential investors understand the security available, so make sure to read them well. Finally, you'll want to take a look at the trading platform that allows you to manage your IRA funds. The way trading is conducted is incredibly important. You'll want to test out the platforms and find one that is easy to understand and use. Here are a few questions to answer. Is there a 24/7 trading platform, or am I required to call in for every single trade? Can I test out the trading platform before signing up? What cryptocurrencies are available for trading or investing? Can I withdraw distributions in cryptocurrencies as well as in dollars? If you want to get started with some research, we've linked to some popular Bitcoin IRA companies in the description below. Well, that's it for today's episode of Crypto Whiteboard Tuesday. Hopefully, by now you understand what a Bitcoin IRA is, a retirement-oriented investment account that allows you to invest in cryptocurrencies with substantial tax incentives. You may still have some questions. If so, just leave them in the comments section below. And don't forget to check out our IRA recommendations in the description as well. Finally, if you're watching this video on YouTube and enjoy what you see, don't forget to hit the like button. Then, make sure to subscribe to the channel and click that bell